Strike? What strike? Chrysler workers spent just a half a day on the picket line, but that's all it took. Late today, word of a tentative deal between the automaker and the United Auto Workers Union.
Alan Greenspan tells me that the housing slump is far from over, and he expects a significant decline in home prices. My interview with former Fed Chairman Greenspan coming up.
Wall Street's bull run celebrated its 5th birthday this week. Tonight's Street Critique looks at whether that run will continue. My guest, Matt Krantz, financial markets reporter at USA Today.
It looks like Boeing's Dreamliner is turning into a scheduling nightmare. The aerospace giant delayed deliveries again for its newest plane.
I'm Paul Kangas.
And I'm Susie Garab. This is Nightly Business Report for Wednesday, October 10th.
Nightly Business Report is made possible by
A.G. Edwards. Objective financial advice can help make sure your nest egg is ready when retirement arrives. A.G. Edwards, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. First GM, now Chrysler. The United Auto Workers Union reached a tentative deal on a new labor pact with Chrysler just 6 hours after walking off the job and onto the picket line. The union said workers will be back on the assembly line as early as tonight. But it's withholding details of the deal until it can be ratified by the union rank and file. Chrysler confirmed the agreement and said it includes a provision for a retiree health care benefit trust. This is the second big labor action and could be the second labor deal the union has struck with a Detroit automaker in less than a month. As Diane Esterbrook reports, experts say the two strikes emphasize the importance of this year's negotiations.
Chrysler and the United Auto Workers Union agreed on a new 4-year contract just a few hours after thousands of workers walked off the job. Details are sketchy, but analysts expect that the deal could be similar to the one negotiated recently with General Motors. Standard & Poor's auto analyst Robert Scholes says the differences could hinge around Chrysler's turnaround plan.
Clearly, the exact details of what happens with health care, what happens with work rules, those will be different, reflecting Chrysler's specific situations. But we don't expect a sort of business-as-usual contract a la contracts of the past decades.
The deal is expected to address retiree health care benefits. It could also include provisions for plant closings. Edmunds.com Chief Executive Officer Jeremy Anwill says Chrysler's need for product flexibility could mean fewer plants.
I would imagine that they're going to be trying to eliminate some nameplates, create a little bit more market demand around some key pivotal products, maybe not try to be covering the breadth of the market like they are today. And that might require that they actually shut down some plants.
Analysts say the deal is important for Chrysler as it struggles to restructure under new private equity owner Cerberus Capital Management. The company is also trying to launch its new Town & Country minivan. The contract will have to be ratified by Chrysler's 45,000 U.S. workers. That could take a few more weeks to accomplish. Diane Esterbrook, Nightly Business Report, Chicago.
Also late today, word from the United Auto Workers that union members have ratified a historic 4-year contract with General Motors. Last month, GM workers went on strike for 2 days. The deal puts the union in charge of GM retiree health care.
The bad news bears had Wall Street in their grip early on today with plenty of negatives, including Alcoa's earnings shortfall yesterday and an earnings warning from Chevron. The Dow slid to a 150-point loss by early afternoon. Boeing's delay in Dreamliner deliveries added to the negative sentiment. More about that delay coming up, incidentally. A very firm tech sector, however, helped the weak blue chips partially recover as the day wore on. The Dow Jones Industrial Average cut its closing loss to 85.84 at 14,078.69. The tech-laden NASDAQ closed up 7.70 at 2811.61, while the Standard & Poor's 500 index fell 2.68 to 1562.47. In the bond market, the 10-year note held steady at par in 24/32, putting the yield at 4.65%.
Alan Greenspan reiterated today his concerns about the housing downturn and the impact it could have on the U.S. economy. This morning, I sat down with the former chairman of the Federal Reserve to talk about these issues and his new book, The Age of Turbulence. Greenspan is no stranger to Nightly Business Report. In fact, he was the first commentator on our program back in 1981 and appeared regularly to give his opinions on the economy. My first question to Greenspan today: what shape is the U.S. economy in right now?
I would say, excluding the problems we're having in housing, it's in reasonably good shape, better than most of the times I've dealt with it. The trouble, unfortunately, is we are undergoing what looks to me to be an inevitable significant decline in home prices, the result of the buildup of very large inventories of new homes, which are twice the level of what they ordinarily would be.
So, Mr. Chairman, as you look at the housing market, do you think that the downturn is almost over?
No. There's a great deal of uncertainty out there. We haven't been through a marked decline in home prices of this order of magnitude in my economic awareness, which goes back to 1948. But we'll find out soon enough.
Everyone I talk to wants to know, is the worst of the credit crisis over? What do you think?
If you look at, say, AA or even single A corporate bond yields, they've just been flat. They're doing fine. And the corporate sector is doing fine. I mean, obviously, it's in much better shape than it was 5, 7, 10 years ago. But the presumption that they will go back to where they were on August the 8th is unrealistic, because what this process is doing is actually unwinding the very prolonged underpricing of risk. So we're getting different relationships.
Many analysts are saying that even though the Federal Reserve cut interest rates, banks are still very cautious about lending. What impact could that have on the economy?
It's not a severe credit crunch. What it is just higher rates. And higher rates will bring slower expansion until they are absorbed. And provided we don't have other problems created as a consequence of the home price thing, we're probably all right.
You said a few months ago that the odds of a recession were 1 in 3. What do you think now?
I'd say that they're obviously higher than a third. I'm reasonably sure they're less than 50-50, which means that odds are better than 50-50 that we'll skirt a recession in this particular period.
What about high oil prices that are now like around $80 a barrel? Does that increase the chances of a recession?
Not in and of itself. Remember that there was a great deal of concern of what would happen to the U.S. economy and the world economy when crude oil prices got up to $50 a barrel. Nothing happened. We then said, well, 70. Nothing happened. Now we're at 80, and it's hard to find any real problems. Nonetheless, it's still an issue, but nowhere near the issue it was 30, 40, 50 years ago.
When you look at the American consumer, it's really interesting that in the face of high oil prices, declining values in their homes, that consumers continue to borrow and to spend. They are just amazingly resilient. Do you think that there's any chance that this trend will reverse itself?
If we get a decline in net worth as a percent of disposable income of households, the answer is yes. The critical point here is, one, home prices are going to go down, the market value of home assets are going to go down, and it depends what happens to stock prices. Will stock prices offset that? Very recently they have. Will they continue to do so? It's very tough to judge.
You know, looking at the Fed's minutes from the September 18th policy meeting, it indicates that Fed officials don't see inflation posing a threat to the economy. Do you agree with that?
It's not going to be as easy as it was for the Federal Reserve when I was there, because we didn't have to worry about inflation very much. Ben Bernanke and his successors are going to be grappling with a lot more of a problem of inflation than during the 18 and a half years that I was at the board. if you look at underlying unit costs, they are beginning to rise in the United States as they are elsewhere.
As you know, next week is the 20th anniversary of the crash of '87, and you wrote about this extensively in your book. But looking to the future, in the future, what could trigger a sell-off of that magnitude?
Anything. The issue is once you get to the point where the speculative fever breaks, which it does on its own for internal purposes, what happens to be standing there at the point of the break, whether it be somebody making a speech, whether it is weather change, whether it is some form of event, it will become the cause of the next decline. But the cause is essentially internal. It's the internal dynamics of booms and busts or bubbles and bursts. It's human nature. It's not something which we can do very much about.
You've worked for so many American presidents. As you look at the candidates who are currently running for president, which ones, and feel free to name more than one, do you think will do the right thing for the U.S. economy?
None of them are properly addressing the issues that I'm concerned about, and I trust that as the election gets closer, that these issues will come sufficiently large that what is basically a large degree of evasion by most of both the Democrats and the Republicans comes to an end. But if it doesn't come to an end, reality will force it, because the next president of the United States is going to have to deal with these problems, presumably in the second term.
Mr. Chairman, thank you so much for your time and good luck with your book.
Thank you so much.
Treasury Secretary Henry Paulson today announced a private sector initiative to help struggling homeowners avoid foreclosure. It's called the Hope Now Alliance. 11 of the largest mortgage servicers have agreed to coordinate and scale up their loan modification programs. The alliance will work with nonprofit credit counselors to help borrowers work out unaffordable loans. Secretary Paulson says the alliance is an important first step to address the rising number of foreclosures.
The key thing is to get to people early, and if we get to people early there and we get the right people at the table, it's going to make sense in a number of instances to be, as you say, refinance with a new product or to do some form of modification that's tailored to the individual.
Paulson says the Hope Now Alliance will launch a direct mail campaign targeting at-risk borrowers and urging them to contact the group for assistance.
Boeing's Dreamliner is having a difficult time taking off. The aerospace giant is delaying the initial deliveries of its 787 Dreamliner by at least 6 months. Boeing continues to have problems assembling the airplanes. Today, the company said deliveries scheduled to begin next May will now be pushed back to late November or December of 2008. And the 787's first flight is also being delayed. It's now scheduled for the end of March. And Paul, Boeing said the postponement will not affect its earnings or guidance for next year.
Susie, Boeing stock was the big Dow loser today, and we'll see it in a moment as we take a look at our stocks in the news tonight. Big board volume leader on 15.7 million shares. EMC for the second day running it was the most active, and today up 76 cents. Its VMware spinoff at $29 back in August is now worth $107.04, and EMC still owns 87% of that stock. Citigroup down 48 cents, and then Quest Communications International 49-cent loss. Ex-CEO Joseph Nacho of Quest is asking for his insider trading conviction to be overturned. Pfizer, no change today. Then the big Brazilian firm Companhia Vale do Rio Doce, down 10 cents a share. Moving along, if we can, Okay, we'll have a look at some of these others in the active list. General Electric, 21-cent drop. J.P. Morgan Chase at 66-cent loss. Then came Alcoa down 99 cents after the close yesterday, as we reported. Third quarter earnings 64 cents. That was a penny below the Wall Street estimate. Ford Motor had dropped 9 cents, and then AT&T was off 23 cents a share. Boeing itself down $2.77, traded as low as $97.71 today, as you heard, delaying the delivery of that Dreamliner by 6 months. And some of Boeing's parts suppliers were hurt by the news from the company. Honeywell down a little over $0.50. Rockwell Collins and Spirit Aerosystem, a little bigger losers there. Chevron down 72 cents, traded as low as $90.35. Company says third quarter net profits will be substantially below the record second quarter of $5.4 billion because of a sharp drop in refined product margins. International Paper down 88 cents. Company warned disappointing land sales will push its third quarter profit below the street estimate of 62 cents a share. Company says it sees only 52 cents. Then the Shaw Group, which is an energy services company, up $4.18. Third quarter earnings of 67 cents versus a loss of 21 cents last year. Revenues jumped 31%. Greenbrier up $2.38. The company's in an 8-year deal to build 11,900 tank and covered hopper rail cars for a unit of General Electric. Then Lindsay Corporation, which makes irrigation systems, up $3.42. The company reported fourth quarter earnings higher, 32 cents versus 26 a year ago. Revenues up a very respectable 30%. Downey Financial down $6.25. Company sees a third quarter loss of 84 cents a share. The street estimate was for earnings of $1.08. The company said the loss reflects $82 million provision for credit losses and a $9 million drop in the value of some single home lots that it owned. Apple topped the NASDAQ active list down $1.07, but Google continues to hit new highs today, up $10.21. Merrill Lynch set a $740 per share price target on Google. Research in Motion up $1.36. Costco Wholesale up $5.81. Fourth quarter earnings excluding one-time items 91 cents, up from 83 a year ago. Same-store sales up 5%. Baidu.com jumping $14.40 a share. Cisco 19-cent gain. Intel 4-cent rise there, and Microsoft up 13 cents. Dry Ships up $2.35, and then Oracle up 34 cents. You can see the tech stocks did very well today. Then we see Origin Agritech up $4.99. Forbes Asia magazine made some positive comments about that particular stock. And then KMG Chemicals was tumbled $2.93 after reporting lower than expected fourth quarter profits of 18 cents a share, 13 cents below analyst estimates. Quite a drop. My street critique guest tonight says there was a very special birthday on Wall Street this week. Matt Krantz, the financial markets reporter at USA Today, joins me now to talk about the bull market's 5th birthday. And Matt, welcome back to Nightly Business Report.
Thank you, Paul.
So the bull is 5 years old. Does that mean investors should be celebrating or running for the exits?
It's hard for a bull market to make it to 5. Only 5 bull markets have done it, so these are the 5 for 5. But it's because of that investors get a little nervous when bull markets make it to their 5th birthday.
I think the average age is about 3.5, right? So we're way over that.
That's exactly right. Most of them peter out before they even make it to their 4th birthday. So all eyes are on what this one will do in its 6th.
Okay, so it could continue in bull mode and one way or the other, but we're nearing an end of the cycle. You would make that observation?
It's hard to make it much further, but the 6th year does have some things going for it. We have the elections coming up, and also the 6 years tend to be a good year on Wall Street.
Oh, well, what's been leading this bull market higher?
So far, since the bottom, we've been led by energy stocks. They've been charging forward, and they've hurt at the pump, but they've really charged forward on Wall Street.
And I understand that you think one of the best ways to follow the energy group is through an exchange-traded fund for energy. Let's throw up a chart of that right now, and we can see it's done very well.
Yes, if you think energy can continue to lead this bull market, you can continue, or you can look at this ETF here, which tracks the S&P energy sector.
Exactly. How about another sector that has been participating nicely?
All eyes are on technology. It had a good day today. It held up while the rest of the market had some trouble. And all eyes are on Google and Amazon and all these leaders in technology that are charging forward.
Well, that's a nice chart also. Any other way to participate with greater diversity, perhaps?
If you want to play all three angles of this thing, you want to own energy, technology, and also large caps, you can pick it all up with one ETF that tracks the S&P 500. A popular option is the SPDR or the SPY.
Oh, yes, and that's had a pretty good move up recently also.
It sure has.
Okay, that's a good way to track them, if the bull market continues, of course. Matt,
That's right.
do you own any of the ETFs mentioned here or have any other disclosures to make?
I have investments that track the S&P 500.
Okay, fair enough. I want to thank you for joining us once again.
Thank you very much, Paul.
My guest, Matt Krantz, financial markets reporter at USA Today.
In tomorrow's Bill of Health, how hospitals are using aviation technology to become safer and more efficient. Here's a look at what's happening tomorrow. The August trade deficit and September import prices are released, along with the weekly reports on jobless claims and crude oil and gasoline inventories. Also tomorrow, earnings from Domino's Pizza, Infosys Technologies, and PepsiCo. In the Money File tonight, is freezing your credit report the right move? Here's some answers from Terry Cullen, personal finance columnist at the Wall Street Journal Online.
All consumers will soon be able to freeze their credit reports to help prevent identity theft. Previously, the three major credit bureaus, Equifax, TransUnion, and Experian, generally extended this privilege only to identity theft victims and residents of states that required it by law. When you freeze a credit report, lenders and others can't see your file until you ask the credit reporting agencies to thaw or open it. That means you, and a potential identity thief, can't open a line of credit in your name until the credit bureaus have your written permission. TransUnion will be the first to offer security freezes nationwide starting on October 15th, and Equifax said it would offer freezes by the end of this month. Experian announced this week that it will make the freeze available to all on November 1st. Consumer advocates applaud the decision to offer freezes nationally, but lenders, retailers, and others say there are easier ways to prevent fraud without forcing consumers to contact all three agencies every time they want to open a line of credit. Then there are the fees. It generally costs $10 to initiate a freeze on one credit report and another $10 to thaw it, though some states do require lower fees. The average couple would have to pay $180 to freeze their files and then thaw them when they need to obtain credit. Is a freeze right for you? Generally, it's a good idea. A security freeze provides a strong layer of protection against identity theft. If you're planning on opening a line of credit soon, or it's likely a potential employer might need to access your credit reports, hold off for now to avoid the fees and hassles of placing and removing the freeze. I'm Terry Cullen.
Recapping today's market action, no enthusiasm for the blue chips today. The Dow dropped 85 points, but the Nasdaq Composite gained 7 points on a strong tech sector. To learn more about the stories in tonight's broadcast, to watch our streaming video, and to take part in our daily blog, go to Nightly Business Report on PBS.org. You can also email us at nbr@pbs.org.
And that's Nightly Business Report for Wednesday, October 10th. I'm Susie Garib. Good night, everyone, and good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
A.G. Edwards. Objective financial advice can help you build a better nest egg. A.G. Edwards, fully invested in our clients.